Market Mastery, welcome back. The 1 hour you need to make money in this market. We have some very exciting stuff going around. We are asking the question as to whether or not the market has turned around. We are looking at new angles of defensive stocks, and we are trying to figure out the next big runner. And we think we have a few leads that are going to point you in the right direction. You will be getting your SPY options trades, both bull and bear trades, to make sure you make sense of this market and can profit off of either direction. You will get some detailed analysis on some of the big names that we've been covering for the last couple months, as well as some insight on some recent news on a big winner of ours that is in the running to secure a multi-billion-dollar contract. Then we will close a little bit of smash or pass and a little bit of value sense to look at some fundamental breakdowns of companies that we love and that you want to know about, followed by the charts that you are asking for, joined by my handsome co-host here, Mr. StockSavvyShay. Hello, sir. How are you living today?
Doing well, doing well. I got to go on Fox earlier today, come back, see.
Ooh.
Yeah. And I got invited to on the 24th. I will be in New York City, everyone. Don't know if anyone is gonna be there, but I will be in New York City for a week on the 24th. I got invited, incredibly honored to be one of the few panel speakers on Fox Business's Unbreakable Investor, the next generation. So love it that I'm get to be on the stage to talk about where investing is heading next. Started over here. Austin and I have been doing this, I don't know how long, 6 months, where we've just been here every single week. And now it's same content, different stage, same passion, different spotlight. And it's just something I'm looking forward to. Exciting times. 2025 has been a banger.
It's been exciting, man. And I think that's awesome to be featured on national syndication. It's something else. I think it's exciting. And what do you feel like was the pulse that they had on the market, or did they give you any of that?
No, I mean the pulse, it's honestly the same rhetoric. It's almost it's not a vicious cycle, but there's a cyclicality. Right now it's happening on a narrative where confidence is dead. Like, you just can't trust what is being said a bit, where like Trump can say something and then all of a sudden within hours later it's something not completely different, but something that's different, that's straying away from what we thought was the truth, and it's causing somewhat of a chaotic environment, and it's deflating confidence. And when the market doesn't have confidence, it takes time to kind of get that back. It's not going to be a V-shaped type of recovery for confidence. Like, that is a semantic layer that takes time to build back up again. I don't know, if you got cheated by your spouse, like you lost all confidence in our relationship. Sure, you guys might try to work it out again, but that trust that you lost is going to take some time to build up. That's what we're kind of experiencing right now with what Trump's doing, what Lutnick's doing. Like, it's all conflicting information that we trusted the equity markets for a long time, especially our global trade policy. That is getting uplifted upside down right now, and we're getting conflicting information. We're like, oh, I thought this was how it should be, how it always has been. Now it's turning it upside 180, and now you guys aren't telling me the right messaging. I lost all trust and confidence I used to rely on as my default. Now I'm trying to build back up. It takes time.
It does. And I think, too, you made a good point that and Poogie did as well. Trust is an escalator up, elevator down. I was going to say, the one I've always heard is that a bridge may take 10 years to build, but a day to destroy. And it's like, that's trust, dude. I mean, trust is a choice. And trust but confirm, I think, is the approach at this current moment. I'm willing to take it into consideration, but I'm going to confirm the facts before I make any sort of decision that has a financial ramification. Speaking of those decisions, let's take a look at where those decisions have left us in the market. So after one of the most, I would say, jarring sell-offs that I've experienced short of COVID, it seems that we are rekindling the passion and the fire on the breakout again. We gave you a couple 100% plus runners off of this. The SPY trades off the bottom at 496. That same contract that made you 100% on Monday made you over 100% on Wednesday, and then you could even argue it paid again on Thursday. So the point here is to give you two specific options contracts that you can focus on that will lead you to a successful trade. That is the goal, always and forever. So looking at the chart today, I would say that right now we are in an interesting position right here, right snug in the middle 537 to 540. I don't love this range. I like above 549 and below 524. So right now we're just splitting the difference, and I don't think that the trades here are really all that material unless we hold 537. So the bullish trade is the first on my list, simply because it's the setup that we've been afforded right now. So you could see that we've been holding 537. That's the gap to 534. It's been closed. I would trade on the anticipation of this testing the upside before I think it's going to test the downside. And that means that we could expect roughly, if we get the upside move, a $10 move on the SPY. So I am liking the 544 calls 2 weeks out at least in expiration, only if we continue to hold 537. That is the key level this needs to hold for bulls to regain any semblance of control in the short term. Above 537, I love the 544 calls. Those should print to the tune of 50 to 100% if we get the run. If we don't get the run, things do turn sideways. Remember, there's a lot of noise right now about the bond market and the sell-offs, and arguably that's a little bit of a deeper lane than we want to go into, but suffice to say it's not good. Even though it doesn't directly reflect in the equity market instantly, it will have an impact. So now looking at the downside opportunity, I would argue that 537 is the same point. We want to see this break. So if we see this price start to break down and we violate 537, I will be very interested in the 524 puts, because I think if we sell off, we have an opportunity to go down to 511, maybe even $500. So those puts could play a couple 100% if traded correctly, meaning violate 537 as support, which is also the top of this range here. Then we're going to go into price discovery and we're going to retest and see what our lows are. I love, again, the 524 calls, at least 2 to 3 weeks out. They should pay handsomely if we break below 537. I will be looking for a 15-minute confirmation on that break below 537, meaning the candle pops through and then either closes or a new candle opens and closes below that 537 line. That's how I know this trade has been activated. I will then hold it probably to 529 to 524, depending on the volatility. I will hold it until I see what could be 200 to 300% on that contract. I think it's highly likely. All options carry risk. If you don't know how to trade them, the Discord link is at the bottom. Come learn how to trade them before you start doing it. Don't throw your money away. But I do think that that's going to be our two best trades there. So the 544 call on a break to the upside, whether we hold support at 537 or we just get a breakout. And then 524 on the downside, puts 2 to 3 weeks out, and trade those down to potentially 515 to $500. So again, my goal is to give you the best opportunity. Those are the two contracts I really like right now that I personally would be trading in this market. And I think that about covers it. I mean, Shay, looking at the SPY, let me get rid of all this nonsense. Looking at the SPY, like on the 4 hour, for example, right? You can see expressive volatility, insane volatility, but you're also getting pretty significant capital infusion, like dollar for dollar basis. Some of the strongest inflows we've seen in a while at 480, 490. What are you feeling about this recent print? Trusted or done?
Well, I mean, it was April 7th was the near-term bottom, the recent bottom. I think that the move since then, the VIX was at a 50 handle, guys. Like, that's a lot of fear that's factored into the market on April 7th when it was at 50. Like, that's COVID related. That's a COVID high. That's the yen carry trade crisis high. There is a difference, though, between this correction and the prior correction, which is the yen carry trade crisis. That was purely technical. There is somewhat of a hangover psychologically that's happening right now, because that confidence I just told you guys that's lost, it does take time to build back up. And unfortunately, it's having a substantial psychological effect on enterprises and consumers that will take some time to phase out. Because if you're a C-suite, just put your CEO hat on right now. Are you going to continue your aggressive CapEx plan that you entered 2025 with all these different pieces moving on the board right now? No, you might be starting to second guess. That second guessing snowballs into so many different legs of that business that then snowballs into so many different components of the economy. For example, I just told CapEx. Maybe you won't be as aggressive in your CapEx. Maybe you're trying to do 100 billion entering the year. Maybe now you're like, all right, well, let me just take 15% off just to give myself a little wiggle room if things do get worse, that we won't be so fully committed where now there's noise now. So I have to reflect that noise. That's part A. Part B is there's going to be hiring freezes. If you were trying to launch a new initiative, a growth initiative in 2025, that has been essentially put on the sidelines because you just don't know what the implications of the tariffs will be in your organization. You just don't. So you don't launch something brand new or put all your soldiers into something brand new when the environment is changing rapidly. You don't have a sandbox to control your risk anymore right now. Tariffs can change on a whim, week by week. So you can't decide something right now, and then a week from now, it could change completely, and all the work you put in right now will be wasted. That's wasted capital, and that is always the top of fear for the CTO, CEO, COO, CFO. All of them cannot stomach wasted capital. And right now, wasted capital is highly vulnerable. So people are going to just take their foot off the gas pedal, and that's going to affect business spending. And then on the consumer side, we're not idiots. We see the headlines. Prices are going up because of tariffs potentially. Yeah, there might be some kind of demand vacuum that's happening on cars or certain big purchases that people were playing on for a while. Like, we have to do now, or it's going to increase 15%. Fine, maybe that's it. Cell phones, like all that stuff, fine, maybe. But really, the discretionary budget will get slashed. It's going to, because people want to prepare for the worst. People want to prepare for what if this is an 08 situation? What if this is just a great financial crisis again, all over again? And we're in a first man-made recession since 2020, since World War II. Nobody really knows. They always aggressively go on one side to prepare for the worst. This might be happening right now. So now you're seeing the consumer side and enterprise side already get front run these potential tariff impacts when tariffs just got launched last week, or it's now getting delayed 90 days. That doesn't matter. The psychological damage has been made already, and you're going to see that reflected across the earnings cycle for this one, probably the one after. And that's the hangover. That's the why that we're not that's any kind of balance we see in the market. It's going to be anchored down because this hangover is real and it's here to stay for at least the next 3 to 6 months.
Right. And I mean, you have that, it's duplicitous. You have that on top of like Shopify's recent announcement that like, look, AI is going to be core to your skill set. If you don't have it, you won't be here. And then you look at some of the developer numbers right now, like who's hiring, who's not. Dude, it's going to be a tough market out there just in general, I think, because a lot of these higher tier status jobs, I think that we're paying pretty handsomely, you're not getting hired for. Like I've talked to a few pretty seasoned people in the job market that have held like C-suite or close jobs that can't find a decent paying job right now. At least not what it was paying before. You know what I mean? And nobody wants to take that haircut because your dollar buys you about half of what it did 10 years ago.
For the early listeners, do you guys remember what I was saying right from the get-go? Capitalism is going to be absolutely brutal in the agentic AI world we're about to enter. Don't run, sprint. It's going to, segregation of classes are going to be drastic. And I sound like the Grinch right now. So let me just like put a little bow on top of what I'm trying to say. I'm being realistic about the near term. I'm still a big time bull in the fourth industrial revolution, like a big time bull. And I think that these are the moments that truly define long-term investing. Like there's rare opportunities when high quality assets, early disruptors, and secular growth themes are falling across the board, not because their businesses have weakened or that growth thematic has been, the thesis is cracking, but because we're in a macro-driven panic mode right now that's forcing indiscriminate and selling across the board, where the future's on sale on like a Palantir that's like, Palantir went down 45, 50% or 40% recently, but like, is the thesis really broken in them? Did you just see that NATO news this morning? I think it's actually expanding a bit. And I'm not saying buy Palantir now. That's just a great example. I'm just saying long-term investing isn't about perfectly timing the entries and exits. It's about recognizing when market sentiment is detaching from the business reality of these early disruptors. When short-term fear clouds long-term trajectories of these high-quality businesses. And panic cycles come and go. I promise you guys this. We will get out of this eventually. We're going to. But these panic cycles are driven by headlines that's essentially seize investor psychology. Like we're all just frozen a bit right now, stuck in mud because we don't know what's happening this time next week. Geopolitical shocks, tariffs, inflationary spikes, central bank pivots from the Fed. Like there's just so many catalysts right now that's macro driven noise that's causing a lot of FUD. And that's why you saw the VIX hit a 50 handle a week ago. They trigger broad-based selling and they hit everything from the shitcodes out there to the Palantirs out there. It doesn't matter what you are. It doesn't matter if you have a pristine balance sheet or you're pre-revenue. You're just getting hit across the board. And this fear-driven price action, you cannot confuse near default price action when everything's going down 30%. You think the thesis is breaking. It's not. It's just not. It's just we lost confidence and everything's selling. But in 3 years, probably maybe even 5 years, you're going to look back at 2025 and be like, what happened there? Because nothing really changed. But look at this dip that we had 20% in a matter of 2 months. Like, what happened there?
Yeah.
2018 Q4. Look at that. Look that up. Nobody remembers that really that much. That was a drastic sell-off. What happened? People were like, oh, what was that? That was a buying opportunity. People are going to say the same thing right now. I don't know if it's going to like bounce this year, but I've been telling all of my subscribers, 2025 is a year of accumulation. Add these high quality names, the new age of defense, like the title I'm saying, where it's the Palantirs, the Cloudflares, the Axons, the CrowdStrikes. Look at all four of those names. They are showing relative strength in this pullback compared to the other risk on growth names. There's a reason for that. There is. The DoD budget is evolving. It's not just going to spend money on tanks, missiles, or jets. It's going to be going towards software. It's going to be going towards defense that you can't see in person, tangible defense. And the news today from Palantir, that's with NATO. Like that's not just like, oh, it's a one deal. No, that's substantial. Do you know how many nations are on NATO? 32. They just went from pilot 6 months ago, trying out the operating system from Palantir to we're going to fully adopt it. And it's going to happen as they're going to become the baseline infrastructure now for Europe. And all the other countries, you guys can build whatever you want models, but you have to do it on top of the Palantir operating system. That's the must. Do whatever you want country to country. But we now have the baseline infrastructure. You know how huge that is? That's huge. Essentially now, instead of the operating system of AI for America, they just became the operating system of AI for the West. That's huge. And that's why they were up, 4% today? They probably would have been up much more if it wasn't the macro noise. But again, they're a $200 billion company. So I'm not saying buy now, but I'm just saying like it's a beach stock for me. Like I'm not worried about Palantir. That's one of those names where like when the VIX hit a 50, my eyes go straight towards a Palantir. Like that's my high conviction name. So I do believe that we're in and there's opportunities out there. If you get to the cloud and we get past this, eventually in 3 to 5 years, you're going to be like, whoa, that was a buying opportunity. I should capitalize on these new age of defense names. And that's just, if you're not, then I don't know. I'm saying this as someone who puts 1% cash in their portfolio every week. So I'm buying knowing I have cash coming back in and I'm not in a fixed portfolio. I know a lot of people are not like that. I'm not ignorant. I'm fully aware. So if you're one of those people who have a fixed portfolio, I told my subscribers, where we broke the 200-day moving average, raise a 15 to 20% cash position, hold it there until we have capitulation. VIX hit a 50 on April 7th. That was capitulatory. So you could use a half of that, add to your high conviction names, and keep the other half sidelined until we're above the 200-day moving average or the moving averages stop sloping down. We start stabilizing a bit. There's a lot of ways of playing this right now, but I've got to say people are forgetting we're in a fourth industrial revolution where we're just getting started. There's going to be some crown jewels that will be found from this era. And April 7th was the opportunity to add a little of those names.
Yeah, I mean, dude, the opportunity is really something else. Just watching the shift from our angle, but also with some of the stuff we do in capital markets with these guys, like seeing the way they shift their strategy and like the realization and the power that retail has. And I guess really the reality that like you person, myself, Shy, like us, we may not have access to some of the same data that big street firms have, but we have access to a number of the tools and capabilities that they do. Now, it's the great equalizer, right? The internet is the great equalizer. Making information accessible to everyone means the few can't safeguard it and gatekeep it from the masses, right? Doesn't mean everyone's going to take advantage, but even just this show, if you've only traded the names that we've called out in the show, you're up a couple 100%. Period. Plain and simple. Because we've done the research to find the right names to be on top and take a little bit of risk to come out a winner. And I think the same thing is true right now. I mean, I find it hard to be, fearful. To go back to the chart here, I find it very hard to be fearful in this market right now when you have the single largest week of inflows since COVID. Think about that for a second. This week, single largest since COVID. So if you look at this as I think market cycles condense as technology continues to expand. Because information travels so much more quickly, the consequences therefore happen more quickly. And so does the recovery. It's basically the idea that technology has sped up the pace at which things happen. So what you used to see in the market as like a 10-year market cycle, I think is going to be condensed into half of that time at the very most. So I don't know, man. I'm feeling like the tariff stuff was interesting. It was a strategy move. They had to do it. I definitely feel like the boys kind of got a little bit of a text like, hey, I'd buy now, right before they released, hey, we're going to pause tariffs. I think had they not done what they'd done, the market would have kept going lower, and I think we would have retested 23 lows, but it didn't. So right now it's, dude, I don't know, man. I think this is in a sick way, there's an optimism here. Like, well, I feel like again, single biggest inflows since COVID on a singular week.
No, I mean, I'm not going to say I like, but I understand the strategy of brute force that he was trying to do. I understand it. I do. I don't understand. I don't like the execution of the rhetoric across the other speakers, saying one thing and the other person not saying, not backing up that rhetoric. Like, it's just too confusing. Like, imagine if your mom and dad, oh, I'm so proud of you. And then dad was like, why did you do that? Like, you're just conflicted. You don't feel confidence. You feel like weird. Like, all right, well, mom said this, but you're saying this. Like, I don't feel like I'm doing the right thing now because you guys are telling me conflicting messages. And for China, like, I don't want to get too political, but like, what do? They export the world, essentially. Everything all their products are exported through China, a lot of it. They don't have the internal demand that the US has. I don't know what the world GDP is. I forgot what the percentage is for US. I want to say it's like 25%, 20%. We have that internal demand. So what my 2 cents of what Trump was trying to do on this brute force was he was trying to suffocate everyone around China so that you either choose the East or West. Like, we're going to put tariffs across the board on everyone, make everyone hurt. So now they have to choose the sides instead of just like, oh, like we're going to respect our allies, not touch them, but the allies will still go through China and China will be just fine. But they wanted China to really feel the pain. So they wanted, in order for China to really feel the pain as that export engine of the world, Trump had to make everyone feel like just a ton of pain. But that really wasn't messaged effectively. Like, that's just me filling in the blanks. Like, that's why I think he did. I don't even know for sure. So I just think the execution was poor. It just was. And I think that we lost the leverage we kind of hoped that maybe we can have. And now we know the truth. The bond market is what's running the show. If the 10-year yield hits a 5 handle, we already know what's going to happen. Tariffs, no more. And that's exactly why the bond market's getting somewhat manipulated by Japan, China, etc. Because they see what's happening. If they just cause the 10-year yield to hit a 5 handle, that will force POTUS's hand to do what they kind of want or take the leverage off. So we're in a delicate balance, and we lost a bit of leverage. If you think about it, like 145% to 20%, like that's a drastic difference, but really like how much pain was caused during that process, a lot. And it's something that's going to be affected. The psychological effect I called out earlier on the confidence, that will take some time to build back up. So even though like he took back those tears from 145 to 20 and like 10% across the board for everyone else, like the psychological effect was done, and now we have to recover.
Yeah, pick up the pieces, and I think, I don't know, I see a little bit of strength here, more so than probably most anticipated. Like with anything, a very large drawdown typically results in a little bit of a snap back up. But the goal for us is to find that point of stability in which it's the smart trade, not just the reflexive one. We don't want to, I personally would never want to be reactive to this, because as confident as I may be looking at this, that, or the other, if it's not a setup that crushes, then it's not worth looking at. So before we move on to talk Rocket Lab and some of these other names, I want to make a quick mention, and I'm going to pop a quick video on here. I'm very excited for Traders Paradise 2025. It's going to be very interesting. We got some big guests coming. We got some great material we're going to cover. I'm going to show you a little bit here, and then we're done. If you want more information, you can get it. Some of the greatest results I've ever seen of people that were new to the market. And I would argue that you can learn more in one day at this than you will in an entire year online. How are we doing compared to what the goal you set out to achieve?
So I have made it to $258 a month average dividend income right now. So I'm happy about that. And I should be upping that tremendously soon. I'm doing pretty good considering all the things that's going on in my life right now. I'm up about maybe 1,200 since January, I think. Just following Ben's suggestions. I've been following him to the T. So I've been doing well with that. I've been listening in to everyone else, but I think I'm doing pretty good.
Since we had the trip, I've been able to meet the goal pretty much that we set out, probably at least 3 out of 4 weeks a month, sometimes more. I think it was like 500 a week at the time, dividends.
Would you say that the trades that you initiate, right, so the risk that you take on, does it meet the parameters that you set out to meet in terms of a yes or a no?
No, it does, yes.
Okay. And what has been the result of that?
Positive.
Bada bang.
Profits. Bada boom.
There it is. There you go. Those are real people, by the way. Some of them are on this video. So I've never seen a better scalable result from a few days of like intense effort than I have from that event. And proud to say that at least 12 out of the 13 that attended the first one, which kept very small, have met their weekly goals of profit, which again, you hear me say, install an ATM in your living room. They've done that simply with 4 days of education. So if you want to get access, get it fast. I believe we either have sold out or have one ticket left on the VIP tier, but we still have the gold and silver tiers, which are not VIP, but still worth your time. Again, learn more in a day than you will in a year. So if you want more information, the link's up there. Porter just posted it, or join the Discord and ask, and we'll send it to you. So let's get into it. Rocket Lab, big announcement. I'll let you do the honors because you just informed me of it.
Yeah, so Rocket Lab, they got on-ramp for the potential to win a multi-billion-dollar deal from U.S. and U.K. defense contracts to advance hypersonic tech via their Hasten program. So, again, I think there's going to be a ton of infrastructure spend that's going to be had on the space economy. There's going to be. It's not just SpaceX. There's a ton of early disruptors. We have Rocket Lab, who I've been coining as the FedEx of space economy. The space logistics coming in the future. You have AST Space Mobile, ticker ASTS, like they're going to become the American Tower of Space. There's a private company out there called Starfighter, where they're all about launch agility, Uber of space. Like there's just so many different early disruptors in the space economy that there's going to be so much flow being drawn in this sector that's like almost a high tide raises all boats.
Big
he's wearing the shirt.
Starfighter. Yeah, they brought us out to show us everything that they're working on at the Kennedy Space Center. It is unbelievable. I really appreciate it. They also brought us out in style, so shout out to you guys. That was awesome. I'd never ridden on a private jet before, so that was cool.
No, but they're doing great things. Like although they wine and dine us, but like I'm just saying, like I don't call it BS. Like I spoke to their management team. Like I interviewed them. They're going to hopefully see that video soon. Like they have a partnership, just like how Rocket Lab has one with New Zealand. Like their ability to do what they do on the NASA Kennedy Space Center is massive. That's something that isn't just available to any Joe Schmo space company. It creates a high barrier of entry for the competitors. So I think that and launch agility is going to be a real thing. And they're creating a physical environment where you can test a lot of things out. That's like way not too far up in our head, above our head in space, but like in between. And I think that that's going to be substantial when you're an early secular growth theme. You have to be able to test all these different environments before you deploy them. That's how it is. You're seeing it right now in NVIDIA, their whole spiel for CUDA was they're creating a virtual environment for you to test algorithms before having to deploy them. And that's essentially part of their CUDA platform, but that's another feature that allows developers and companies to stay in their pricey ecosystem and not leave and get their hardware and leave. Like they're staying because of that. Having that virtual environment for NVIDIA was a massive moat. Starfighter has a same kind of physical environment, same kind of ethos as what I just talked about for NVIDIA. So like there's just so many exciting companies out there. And I do believe I'm just excited. Like I really am. It's the next frontier after AI and quantum, and it's got legs. It has a ton of legs. And when we were talking to them too, like the amount of red tape removal in 2025 alone surpassed the previous decade. That's just because of, guess what? The first buddy, Elon. They're high tide raises all boats. That's what I'm talking about. Like they want to benefit Starlink and SpaceX. They're going to get rid of these red tape, stop with all this BS admin stuff. And now we're going back towards innovating to appeal Elon, but it's going to help everyone else in that space as well. And that's what I mean by high tide raises all boats. So cannot be more excited about the space economy.
Yeah, it's going to be something else. I mean, just the sheer thought of the commercialization of the ability to launch a satellite in short time. Like, you guys got to realize, like, stuff like that, like even 5-6 years ago, probably took 6 months to a year to even consider it with all the red tape and everything else, not to mention the cost and the access and the providers that could do it, because no one's going to space. So to do it in a scalable way, obviously depending on the aircraft, I think it's pretty impressive, and I think it's going to completely change the way we view data, just business in general. Maybe being able to launch a satellite offers you data points that very few, I think, have access to, and I think that is a whole new shocking era that we are just not yet understood or prepared for. So moving on from that, a quick question, because I saw a few comments about Tesla. Someone asked specifically you. Curious your confidence in Tesla in the coming 10 years.
Oh, 10 years. First off, like Elon has never struck out. I think I don't want to be deluded. Like Waymo it's ahead of Tesla, guys, on autonomy. Like I'm not delusional. It is. I live in LA. Like Waymos are everywhere. My fiance takes Waymos all the time to work. She loves it. It's not that much more expensive. You feel a lot more safe because like she's a 25-year-old woman in LA and she just doesn't want to deal with like the potential dangers of a stranger driving a car that she's going to be in. Like that, there's a lot of benefits of autonomy, and Waymo's really far ahead, way further than Tesla. The scalability of autonomy that Elon's trying to solve is in a different arena than what Waymo is. You have to know this. Waymo has a much higher floor, much lower ceiling than what Tesla has right now. Tesla is Madison Square Garden. Waymo is Rayo's Italian restaurant. Way different ceiling. I do believe that if Tesla can solve autonomy, and I'm obligated to think that Elon can get that through because he has never failed, and now he has the president's ear as at his disposal. I think it's going to go through, and this summer's going to be a massive pilots for their unsupervised FSD in Austin. That's going to be huge sentiment win, validating win. If that goes successful, this stock is violently underpriced on what autonomy is going to do for them, and the cybercab network is going to do for them violently. I could care less about the EV business. I know consumer confidence is maybe shot permanently for that. If they don't solve autonomy, this could be This could get really ugly because I don't think they're gonna gain the confidence back from the EV car business.
No, I mean,
that
dude,
much.
that's dead and gone, man. It's just dead
Totally.
and gone.
But that's
Over.
he wanted that though. He wanted to cannibalize his EV business to evolve into this software
Front
and
end
AI
product.
company.
The front end product. It's just
Yeah.
genius. It's a market entrant opportunity.
And so like what are people gonna like pay $15 for a Waymo ride compared to a $5 Tesla Cybercab ride because they just don't like what Elon represented back in 2025, 2024? No, especially when
No.
capitalism is getting brutal, pennies are gonna
Dude,
be pinched.
we
Like,
buy
no.
shit that kills us every day because it's $5 cheaper, 10 cents cheaper.
Did you stop using Instagram when Meta was doing all that sketchy stuff a couple of years ago? No, people still use that product. Like
We're
I
selfish.
know it's just
We're selfish.
it's the
That's what it
psychology
is.
of consumers. Consumers,
Yeah.
it's all about convenience and pricing. If Tesla solves autonomy, they conquer both, and I think they're just fine. I'm not even talking about their Optimus. Optimus is going to be another $1 trillion company for them. So like, if their EV business goes to zero, which I don't think it's going to, I'm just being so dramatic about it, and they solve autonomy and solve Optimus, that alone is a $2 trillion company, easily. And to be honest, like that's a margin expansion. They're turning into a 20% gross margin business to all of a sudden a 60% gross margin business. That's a drastic 180
Yeah.
on a DCF model.
It's psycho. And to look, I mean, trading volumes will always, again, remember, volume always precedes a change in price. Doesn't mean up or down. But typically when buyers come in force, so I think over 1 billion shares traded. Last time we saw this kind of volume was when we pushed off of the lows of 106 and we basically tripled up to 303. So I think that there is another run cooking here. I think this summer the FSC launch is going to be the catalyst to drive it. Just seeing the sheer amount of buying on the weekly and daily, like especially back on the 9th, that's unbelievable. Like that kind of strength when this market was just hemorrhaging, like that shows you clearly that like smart money is following the right names and buying them at a discount, and this was one of them. So I would be curious to parse out retail versus institutional, but I think that whatever's behind this is what we're going to see.
And there's also like, I do want to talk about the near term because I'm talking to future for Tesla. Like near term, tariffs are going to hit them. You can't ignore that. Maybe they're less exposed to tariffs than like the legacy OEMs, but it's still going to be hitting them. Its price elasticity is definitely dependent on the credit markets, the 10-year yield, and consumer confidence, and both of those are pretty shot right now. But also, like, you have to ask yourself, like, why are you investing in Tesla? I'm investing because of autonomy and humanoids, so I'm okay with these headwinds. But if you're not investing in Tesla with those goggles on, like, there's a lot of other names out there in the market. Maybe this isn't for you, and that's totally fine. 100%. We have 15 minutes left, so I think we should do tickers.
Yeah, let's go
Tickers
for it.
chat.
Smash or pass. Drop your tickers in the chat.
Let me share my screen.
While you're doing that, I'll just say this. Breakout over 270. This is a very critical level in which the price explodes from this level. I will be targeting 350 on that breakout as a swing trade. I'm holding Tesla long, but if you're just following along, that's a great one for you to make and join up and make some money on. So we got number 1, KKR. I'll let you get in there.
Let me share my screen. Yeah.
There we go. We got a few. Drop them in the chat. Drop your tickers in the chat. 1 per comment, but feel free to comment 5-10 times if you'd like.
All right, so what we're using is ValueSense. This is like, look how clean this UI is. I love just whenever I export ticker, like let's do KK. Oh my God, TMDX. We got to talk TMDX. Have you seen TMDX's chart, Austin? It's up 37% this year. It is one of those outperformers. I see what KKR is. They don't even show up. I actually never even heard of that one. Let's do TMDX since that was number 2. TMDX is just, it's just one of those names that are just doing really well right now. Look at this. Year to date, 66. Now they're at 81. That's substantial. They are just like, if you bought this dip right here, was this in January? In 3 months, you have 56 to 86. That's up 60-something%. So I think this is a name that people were just got a short report on it. There was a ton of bear arguments. Like when it was going down, what was it? When it broke, like right here, I think this is when the short reports started happening and went from 130 to like 60. And this from 175 to 130, this was a perfect storm of CFO was way too aggressive on their guide. He's gone. And then also there was somewhat of a competing product out there that I mentioned was a Band-Aid, not an actual real competition, but people were just near to false price action. People are like, oh, it must be a disruptor to the logistics moats that TMDX has, but I don't think it is. And you're seeing the flight data now get released every single week, every single day, that shows like Q1 is going to be a dominant reprint. And that's why they're showing, like, look at this, up 19% in 1 week. This is so much relative strength. So I think this is, I didn't sell. I still own this name. So I think this is one of those winners. Next one is ALLR. Therapeutics. I don't know much about them. Let's see. Clinic stage biotech company and developing oncology using. So it looks like it's pre-revenue. I mean, what is happening to this? do you see this?
Looks awesome.
I don't know, but I don't know. I
It'll
wouldn't
come
touch
back,
this to the
man.
mile.
It'll come back, man.
Clearly, the data is not doing well right now for their pre-revenue. I'd pass. You just can't. It's a dud. Don't catch a falling knife. That's, I gotta say, you just gotta pass on that.
Unbelievable. It's gone from
Austin.
10 to 170. Oh, you're looking at
MSTR.
ALR. I was talking about KKR.
Oh no. Wow, look at this momentum score that MSTR is. I mean, I do think there's something to be said with how resilient Bitcoin has been in the sell-off. Every other risk on asset out there has, I think, filled that post-election gap up. Every single one. Bitcoin hasn't. Bitcoin has not hit 70K. They're showing
Sleeping giant.
stupid relative strength, and guess who that's going to benefit? It's going to benefit these MSTR. They're the treasury of Bitcoin essentially now. I don't agree with the way they're handling it. I do believe that they're adding risks to Bitcoin itself. I studied econ at UC San Diego, so everything is screaming is, what is this? What is he doing? This is not econ 101. Like, this is awful. You can't argue against price action, though. This is ridiculous price action. Like, this is so much strength that's being had right now. Like, jeez, look, this is just insane. So yeah, kudos. This has momentum, relative strength. It's a winner right now, price action wise. MBIS. This is like, oh, this is a foreign company. That's
Is that
why it's on here.
Nabisco?
No, it's Nebius. They don't have foreign companies on here as much, but I can go over Nebius. Am I doing something wrong right now?
Dude, MSTR's monthly chart is stupid. Like, stupid. Fuck,
Something's
might have
freezing
roped
right
me in.
Did I?
It's MSTR. I haven't been paying attention. I'm like, it's like, if you want Bitcoin appreciation by Bitcoin, it's just a different vehicle to trade it. I can go options here, so I like that. All right.
Let's
So
see
we don't
Disney.
have this one, so we're gonna do a pass.
Yeah, pass. We're gonna do
So
Disney.
JP Morgan, because one coin. If you want to drop a different one, I'll prioritize you. So just drop a new one in the comments.
Some reason JP Morgan's lagging, but let's do Disney, because Disney is showing a ton of relative strength, which is surprising, because what's more consumer related than Disney? If there's a recession,
Almost nothing, but
right? So
don't fault parents, dude. I don't get it, but like, dude, there are so many adults, like, to each their own, man. But I know, like, married adults with no kids that are just hitting Disney hard. Like, personally, I'm too cheap to even take my own kids there. For what it's worth, it's a scam. I don't like getting scammed. Don't like it.
it doesn't matter though. It's crazy. Like, they're showing.
It doesn't matter.
I agree. It's weird though. I think this will get hit the hard, like one of the hardest. It has a really high
But
momentum.
they also took a beating. I mean, you got to think relative to the year. Like, they already
Yeah.
took a lump. So, and this is a very fundamentally covered stock. So I doubt that analysts saw much more downside here. But go ahead and click that one because I think that's Netflix.
This one?
Worth a quick mention.
Totally.
I mean,
they're having their earnings on Thursday.
guys,
They're
we gave this to you at 180 a share. We gave it to you at 50. Right? Well, no, we didn't. That's not true. I did to people I know, but it wasn't public enough to claim it. But at 180 a share, that's public information that you can go find. We told you this is a 10x. They have cornered the market on distribution, and then they started to develop production. And their production, I would argue, of any of the content houses, I would say that they're at the top of that list. They have found the formula that works. Would you agree? I mean, you're a showbiz guy.
Yeah, 100%.
Their content is probably the best, most polished, most addictive in a sick way. I don't know, but whatever it is.
No, I mean,
them putting Miss Rachel, that was like one of the smartest. That was a massive adoption that I think, like, dude, just how did nobody else pick up? Like, how did Disney fuck that up? You tell me how Disney fucked up owning the rights and licensure of who will be one of the largest stars for parents and kids, dude. How did Disney fumble that bag?
Management. I was like, you got Disney in the entertainment world. Disney is known as a resume builder, but talent leaves. They don't treat their talent well. They don't at all. The mecca, or just like the gold standard in entertainment industry, is Paramount. If you want to work somewhere that rewards talents, it's cool. It's got their finger on the pulse of what needs to be done, type of IP to work on. It's Paramount.
And their app sucks. If you talk to them, just fix your fucking tech. It's garbage because they do. They have some of the best content, but dude,
well, I know that's. I think you're learning the trickiness about the streaming wars. That's why Netflix is getting a premium valuation for the market now.
Yeah,
they are. Like, when was it?
Just click on through.
When was the 2021? Yeah, I mean, they were just like substantially higher from.
It's a juggernaut, dude.
Right here, look at this. That's a
juggernaut.
Huge. And it's because this is where their moat got tested. People are like, oh, streaming's a commodity, Netflix screwed, which the jury was out. I was like, I don't know. It feels like it could be a commodity. It feels like people aren't. Everyone put their IP on Netflix originally, but now what if everyone's IP is on their own streaming app? Like, what's Netflix going to do? It proved that first mover advantage is pretty important in streaming, and now they're becoming what every studio was hoping to become, and they're all failing. The business economics doesn't work for them. It does for Netflix because they started out as a streamer. They wanted to be a streamer. It's really hard to go become not a brick or mortar studio. That's a stupid term, but kinda. It's just an old fashioned studio trying to adopt the business economics for streaming, and it's tricky. It's trickier than people anticipated. So I don't know. Oh, we got 5 minutes left here. I'll stop sharing my screen. Yeah, I mean, guys, moat checks are real. Gut checks are real. Like, that's when you see what's doing well, what's not. Like, in a business environment like this, let's just say a company who is an ad tech or some consumer discretionary, they're exposed to consumer discretionary spend. They beat and guide up in this environment. That's a gut check on, whoa, they have pricing power and a defensible moat, because consumers and business spending is second guessing, taking their foot off the pedal. But that's not really affecting your business. That's showing me that you have a chokehold on your clients, and you can dictate what the pieces on the board will be. It doesn't matter what the environment is. That's huge. And that's something to look out for this upcoming earnings cycle. Not everyone's going to take guidance down. Not everyone's going to guide lower. Not everyone's going to be conservative. Look for those relative strength winners who are like, whoa, they guided up in this environment. They're going to have, they would be up 40% across a couple weeks. If it wasn't for this macro, they're only going to be up 10 to 15% because of the macro. Allocate some soldiers that way because they proved this environment doesn't phase them, and they'll do just fine. Like, Rubrik was one of those names for me. I added Rubrik recently, RBRK. I love Rubrik. And there's names out there. Look out for them. Any final words, Austin?
No, I'm dealing with Robinhood right now, and it's something they fucked up with my account, so I was pretty tied up. But I will say that going through some of those names, I mean, MSTR stuck out definitely. Even though I would say more of a purist when it comes to Bitcoin, I'd rather just buy Bitcoin. But I think it's an interesting opportunity, and we already talked Netflix, and I think those two are both just interesting to continue to watch. If you miss the run, it's unfortunate, but that's exactly why you should be watching this show, so you can get this information before it becomes actionable to the rest of the world. And I think that we have a really good opportunity right now. Just play the market close, join the Discord, come trade with us. You have real-time access, baby. That's the ticket. And anything about Traders Paradise, join the Discord, ask questions. I think you should be there. One of the best events I've been a part of. So that's all I got. Love y'all. Stay blessed now. Bye-bye.